Hello and welcome everyone joining the show today. We're going to be talking about investing in the uranium space. If you haven't already done so, we're going to give you some reasons perhaps why you should. And for those who are, we're going to give you some reasons perhaps why you should stock up. We're joined today by Cory Belyk. He is CEO and Executive Vice President of CanAlaska Uranium, John Bay, CEO and Director of Standard Uranium, and Daniel Major, CEO of GoviEx Uranium. Hello, gentlemen. Hello. Right. Well, let's start with that. There's a lot going on in the space at the moment. It's very exciting and very confusing at the same time. I'll start with you, Cory. Your take on the current situation, Russia, Ukraine, sanctions. It's having a big knock-on effect. And in some cases, people are slightly paralyzed with fear as to what they should do next. How do you read it?
Well, that's great, Matthew. Yeah, should they be paralyzed with fear? No, I think it lies an opportunity for everyone in this space, the uranium space in particular. I mean, as explorers out there looking for deposits, we always look for the signposts where the market's going to turn, where you're going to have a lot more interest in that space and the future of uranium in energy production. So, I look at things like global macros. You talked about the war in Ukraine. Well, it's basically forcing society and forcing governments to reevaluate their clean energy supplies, their baseload energy. And, if you're on fossil fuels, well, there's a drive to have a different dream state out there in time off of fossil fuels. Uranium's a natural piece to that. But now the war is forcing that issue perhaps fast forward, if you want to look at it that way. So, I think it's oddly good for our space in a very sad way, and it's definitely a problem. But, when you think about the fundamentals of uranium, they've really never been better. We're seeing the stock price move for a number of reasons, not just the war. We're seeing long-term contracting coming back into play, which has been one of those key ingredients we've been looking for. And now we've got funding coming into the space. It's going to allow us to do everything we want to do, particularly in the Athabasca or other jurisdictions around the world where, new mines are going to have to be found and put into production to supply the future needs of those reactors that are going to generate that clean electricity. So it's never really been a better time to get into this space.
So, John, for you, you're all Daniel, you're a developer, and you two guys are kind of late stage explorers. It's how does the current geopolitical environment and this need, this clamor for energy security? We've seen the UK, Daniel, you'll know about this, committing to 8 new reactors in the UK. That was a conversation that couldn't be had a year ago. Does it make it a better environment for going and raising capital? Is it cheaper capital? Is it new capital? I mean, what's it done for you, John?
Well, I'd say, first of all, I echo a lot of the things that Cory was saying. Russia going into Ukraine has really led to a few things globally, especially for nuclear utilities who are looking to, where are they going to get their nuclear fuel? And we're not just talking uranium, we're talking conversion, enrichment. All these things pull into the mix. Now, if I was a nuclear utility in the U.S. and we wanted to secure supply, I'd be thinking twice about, contracting with people over in Russia or Russia-influenced areas, and we'd be thinking more longer term. So for us, being Canadian-focused and North American focused, the situation is great. I think investors are now starting to understand that nuclear has to be a part of the clean energy future, and baseload power is going to be needed globally. And where are we going to get it from? So look, there are not enough mines in operation. There's not enough discoveries yet. Those things have to happen. So how's it going to happen? Companies like ours, exploration companies, searching for those. And to make a discovery, you have to be out there drilling. And to drill, you have to raise money. And this is the opportunity for investors to come in now, put their money in and invest, look for opportunities with companies that have got, check all the right boxes. Are they in the right region? Do they have infrastructure? Do they have the vendors? Do they have the First Nations agreements? Do they have, a technical team that's made a discovery before? Look for those things. Invest. Let them explore. Let them do the work and make those discoveries.
Well, look, before I come over to Daniel, I want to stick with the two Athabasca players here, which is, we've seen here in Europe, the German government, who's pretty anti-nuclear, sort of rolled back a few of their policies on coal. They're saying, well, actually, we were going to phase those out. Now we're not going to phase that out. Do you think we're going to see more governments make more real world decisions? And I'm looking directly at Canada because Trudeau government talking about phasing out 40% of fossil fuels by 2030. By 2030, do recent events change that?
Well, that is a stick of dynamite you just threw at us to ask us to talk about Trudeau and his leadership and where we're going. I think as working in the mineral industry in Canada, we're shaking our heads constantly. It doesn't seem that he appears to understand reality compared to saying nice things about the environment. Reality is Canada has got a lot of oil, a lot of oil sands projects that they could put into production, build pipelines and get into the U.S. But Mr. Trudeau doesn't seem to realize that it's better to have Canadian oil in production than to be importing oil from Saudi Arabia or U.S. going to Venezuela. So for us and for all the people in the mineral and oil and gas industry, we shake our head and we're completely flabbergasted by the decisions coming out of our government. But for us, all we can do is focus on what we can do, and that's go out there and make an exploration discovery on uranium and hopefully get our story in front of those same people. And eventually the clean energy story is getting through. We're now starting to see environmentalists actually start to change course on this in Canada as well, where they're saying, wait a minute, coal is bad. We all know that. At least they are starting to understand that. And maybe nuclear is not so bad. So I'll pass that over to Cory for some comments.
Yeah, echoing with John, but one of the things that we saw just in the last week here is that in the budget for the Canadian government are support mechanisms or tax credits, and one of the minerals in there is uranium. So as you explore for uranium, you'll receive tax credits, which allow you to make every drill hole a little bit longer, if you want to look at it that way. It gives you more opportunity for discovery for our investors to make their money go further. So that's just brand new in the last few days. And, that's really important. You're also seeing the provinces perhaps disagreeing with the federal government, going, we're going to get together and we're going to look at SMRs, small modular reactors, as an option for small communities, let's call it that, like Saskatchewan, where I have 1 million people. A big reactor doesn't make sense. So you're seeing the provinces say, okay, federal government, fine. Okay, Mr. Trudeau, fine. We're going to band together and look at this from a provincial level. And I think that's going to be worldwide in many ways. And it's certainly happening here in Canada. So there's a lot of different flavor in there. And it's an interesting time we live in.
Hey, so Daniel, Canada's ranked number 1 on the Fraser Institute as a jurisdiction to do business. Given we're going to need all the uranium we can produce, is Niger going to make the list soon?
Well, number 1 on the Fraser Institute. I think we'll quite get to that. But look, you and I have had this conversation before. I mean, how people assess risk, I jokingly say just because you can't buy a Starbucks does not make a place risky. You look at Niger as a classic example, producing uranium since 1971, never missed a beat. I can get a mine permit done in 4 months. You've got a government mining code that has not changed since 2006, other than some just tidying it up. You've got an FDI driven focused investment strategy there. You've got a government who relies on uranium production and is pushing, like most of Africa, their GDP is commodity driven. So if you want to be in mining, it's got the highest GDP growth in the world, Africa has at the moment, just by the nature of how much it can grow. It's got the commodities for the majority of the green environment, whether you want copper, uranium, rare earths. Africa's full of them and needs to grow. And the government owns the land. So when you go in for your environmental permit or you're dealing directly with a government. We got our environmental permit done as well in under 4 months. The approach was they had a town hall meeting for a week. Everybody who had a problem turned up in that room for a week, and for 5 days solid, they discussed it. And at the end, they signed it. Done and dusted. We're talking completely the opposite. And that's where I see political risk, which is it's not whether you think the government overall is a security risk. That's not political risk. Political risk is, if I drill all of this stuff, have I got a chance of even getting this thing permitted? Is some change in the law for the local people suddenly going to have a massive impact on how I can get my project permitted, make it tougher? These are all costs as well that are coming through. So, what we're finding as well, diversity of supply was already a discussion third quarter last year. It had already become a problem where it was clear getting all of your material from Kazatomprom and Cameco was not a good strategy, particularly as Cameco are already indicating that Cigar Lake has got to shut down anyway at the end of the decade. And Kazatomprom were highlighting their problem, which is at the end of the decade, they start phasing off fast. So it's like, where's the stuff? And that's accelerated a lot. There are a lot of the big utilities that we're talking to and getting those off, we're having those teasing discussions at the moment is, we need to support these new projects that are out there, these new development projects. And Africa, you don't have these geopolitical risks. We're happy to support, whether it's Niger, whether it's Namibia. The utilities want diversity of supply.
They do, and I think there's a big kind of conversation that's happening globally now around energy security and where critical minerals or national security, however you want to kind of frame this, because the average household is experiencing extraordinary energy increases. Cost in, for whether it be heating your house or driving your car. It's not a good time, and politicians are perhaps, for the first time, feel they've got permission to change the narrative and adapt. And I think that's fantastic. But Cory, what do you think this situation does for relations? Because, the geopolitics, and I think, Daniel's talked about this previously, where he said, look, it's just a case of the molecules will just find a different route into market. But you guys, Canada, are looking down south into the US and saying, well, if you do sanction Russian uranium and all associated derivatives thereof, that's good news for you guys. That's really good news for you guys. But how do you benefit from it today as a junior equities company?
How do we benefit from it, Matthew? For us in our game, it's the spot price. It's a long-term contracting price, and anything that drives that will undoubtedly drive interest into what we do in the junior space. And that allows us to finance our programs. It allows John and myself to go out and have our teams do what they're good at doing, and that's making discoveries. We happen to be, geared towards the Athabasca. We believe that's, one of the jurisdictions on the planet that's obviously tier one and displaces others around the planet, taking aside the diversification that utilities may want. But anything that drives that price up allows us to finance, go out and make discoveries, because the only way we do is by drilling holes. And we haven't been able to do that for 10 years. Now we can. And just in the last 6 months, it's really turned for us. And I would say we're going out there and doing the work that's going to amount to those discoveries that will feed into the security of supply for utilities down the road, out of Canada, out of the Athabasca. So it's
But what happens if sanctions don't happen? How does that affect your business?
Yeah, honestly, sanctions not happening probably doesn't change much, because you still have a dream state that the planet has 10, 20, 30 years down the road to get off of fossil fuels. And one of the ways that's going to happen is nuclear. And it's going to be good for Daniel. It's going to be good for John, good for CanAlaska and myself. That's the end game. That's just a reality.
Yeah, I'm going to add on top of that too. Even if sanctions don't come in by the U.S. government, those utilities still have to be thinking longer term about the supply from that part of the region. Even if sanctions don't come in, they've still got to be thinking, man, are we doing the right thing by getting our supply from Russia or Russia-controlled areas? And I think the answer is clearly no. They need to be thinking, we need to be moving immediately to start diversifying and moving faster to get enrichment and conversion. And it's in safe jurisdictions. So not just uranium, but the nuclear fuel at different levels needs to be produced locally, or at least in the hands of friendly partners.
No, I'd agree with that.
Those sanctions are effectively happening anyway by implication. I mean, if you can't ship material out of St. Petersburg because the ships won't go in, and you can't get in, insurance for containers out of St. Petersburg has gone from $2,000 a container to over $200,000 a container. You don't ship out of St. Petersburg unless you really have to. You're in a situation here where material just can't move. I mean, we've been trying to, for our final feasibility study of doing logistics, really updating our logistics review to get pricing, to get out of Niger to Convidine, Comerex, and Cameco. And getting the shipping guys to focus has been really hard, because they're spending the whole time trying to figure out how to get stuff out of Kazakhstan out into the big wide world, not via St. Petersburg. And so by implication, it has slowed down the amount of material that's moving into that market. The other problem you've got is that, and you've seen the announcement, particularly a lot of the European utilities, they've already sanctioned out Russian material. It's not happening. And so they're nicking the space for everybody else on the enrichment side already. So the enrichers are now struggling because they're kind of like, well, that guy at Vattenfall wants material. How do I get the primary product to put that in the pipeline? Oh, by the way, there's some guy called Sprott who keeps nicking the front end of this as well while I'm trying to get it. So you got a massive squeeze in the middle, and that's where it's really getting killing at the moment, and is what's driving the price. So I think what you're also seeing here as well, we've talked about inventory pull down. That's just accelerating at the moment because the utilities have got to take it from somewhere because they can't get it from the normal grocery shop. And they're like, well, I got to just draw down on what I've got. Got to keep going for it. So, yeah, it's going to get really tight. I think my biggest concern on this whole thing is the enrichment side. It's, what happens if you sanction out Russian enrichment. How do you replace it? The only way you can replace it is overfeeding, massive overfeeding, which is great for all of us in this room because, that is a considerable underutilization of the material that they're feeding. Massive inefficiency.
Explain for new people what that means. Explain to people new what.
All right. So basically, when you send, you sign a contract, I'll give you an example. You agree a level of tailings. So you're going to suck all of the U235 out of the product that got delivered down to a certain grade. And when and everything that's left over, the enricher keeps, and you get it converted into a fuel product that you can go away. And I think Dave Cates always does a really good example, which I think is best. For those of you who have one of those orange squeezers at home, where you put it on and you pull the handle down, and you squeeze the orange juice out. So imagine that is the enrichment capacity. Well, normally you'd kind of give it a good pull, you get about a half a glass, you give it a second squeeze, and you get that's the old days. What hurt us in the past was the underfeeding, where the guy'd really lean on it, and he's like pulling the hell out of this thing to get every drop. Now the guy's like, bang, one pull, chuck that orange away, second one in. And so you not getting as much material out of every orange or every bit of uranium that we deliver, which means we as an industry actually have to mine more uranium to meet the requirement of the reactors. And that is starting to feed in and will increase to try and cover that position that's out there. Then you've got the problem that you've got Convidine standing at the moment and won't be up for production until next year. So you've got to find US6 from somewhere.
I mean, thanks for that quite easy to understand analogy, Daniel. I think it makes it easy for people who are perhaps new to this. And what we're trying to do now is just lay out all of the factors which affect uranium's chance of success. So we're looking at the geopolitical component here, which does have a knock-on effect with the supply chain in terms of how it operates. But Cory, we mentioned there one of the other factors which is affecting spot price up to $63.50. I mean, you couldn't have put money on that last year, I suspect, or you wouldn't have put money on it last year. Spot price, do you think that's been driven entirely by the geopolitics, or does that thing we mentioned a few seconds ago, Sprott and Sput, the Physical Uranium Trust, is that the big momentum play here? What's your call on that? In which case, can you what's having the most effect out of those two things?
Yeah, I don't think you can pick which one is the most because they're cumulative and they layer on each other. And I think, whether it's geopolitical, whether it's, just physical lack of supply to fill that demand, or you've got utilities that are now very low on inventories going, we've got to secure the next 10 years. Where's it going to come from? We need to find a McArthur River equivalent every year just to keep up or start to replenish those utilities. I mean, they're short 1.5 billion pounds of uranium over what they had, say, 5 or 6 years ago. That's a big issue. Layered on that, Matthew, is something that when you look a little longer term, that's the near term stuff. But if you look longer term, imagine where you lose 20% of global production as it sits today out of the Eastern Athabasca Basin. Cigar Lake, if they continue producing, is done in 6 or 7 years. They don't have a phase 2 reserve. McArthur River, it's restarting right now. Just do the math. It's going to be 15 years and they're out of war. There are no tier 1 deposits like Cigar, McArthur, put Arrow on the other side of the basin, for instance, that will fill that 20% in the Eastern Athabasca, those 3 milling operations of Orano and Cameco. Imagine that 15 years out. you don't have production from the Eastern Athabasca from the traditional sense. That's a big deal. And I think investors are just starting to warm up to that and understand it, that there's a severe shortfall coming without investment in discovery. And that's where we're positioned very well as juniors in the Athabasca or even other parts of the world to help fill that void that's real and it's coming. And it's just starting to come into the sights of investors now and the utilities and others that's not going to be there in 15 years. It's critical.
I'm going to hop in on this too, Matt. And one thing I wanted to add to that is we've got a lot of new investors coming into the space that maybe haven't invested in uranium before, don't really understand the full process of what it takes to actually make a discovery. Now, Cory and I in the Athabasca Basin, we're exploring right now. Standard, we have 5 projects, and as Cory mentioned, NextGen's Arrow project is probably the next big project to come into production. They're going through construction right now. They're probably 5-6 years away by the time that Cigar Lake is probably finished, and we're sitting right beside them in the southwest corner. So for us, we're exploring. We're doing drill programs, but investors need to understand you don't make a discovery with every program. It's a scientific act. You're following the clues, you're working it, and you have to keep drilling and doing follow-up programs to make that discovery and then delineate it and see how big it is before you're ready to be that next arrow to be taken out and get into production. So it's a long cycle. Investors need to understand that. You get your real torque from investing with juniors right now before they make that discovery. So I encourage investors to look at companies who are drilling, who are doing the exploration work, whose share price maybe hasn't taken off yet, but what an opportunity now to find these companies, find good management, teams who've got technical experience in making discoveries and really look for opportunities. And that's what I think both CanAlaska and Standard have in the Athabasca Basin. I know Daniel's got a great project in Africa as well, so I'll let him speak about his opportunity.
And just feeding on what you're saying there, John, I mean, that's the easy part. Now you found it, now you've got to make it work. I mean, and you've only just started spending money when you get to that stage. I mean, you find a deposit, then you got to infill drill it. So after that, every single hole you drill doesn't add any pounds. It's just making those pounds more secure than they were before. And you're just spending money filling in holes. And then you start the engineering studies. And then you go through the various stages of PEA. And even then, you've got to go and get the environmental permit, which, as we said earlier, a lot easier if you're in Africa than you are in Canada and a lot quicker. And while you're holding that environmental permit, you're still spending G&A all the time, hoping you get to the end of that pipeline that you can then finance it. And I think that's one of the biggest issues that's out there. And even if we find things, they've still got to get to the end of the pipeline. And that is the biggest risk and that's where the utilities are starting to realize they've got to come in and start supporting these juniors like ourselves to get us across the line. And that's one of the things you're starting to see in the mentality on the term contract. The biggest single benefit of Sprott, in my opinion, wasn't this continual trend. It was the thing they did at the very beginning. They moved $30 uranium into $40 uranium. Nobody could contract at $30 uranium. Now, as soon as they moved it up to $40 uranium, the producers are willing to go in and negotiate at that price. And that's been the thing that's been pulling it up. And then what we saw last year, RFPs started coming out to developers. And they started trying to understand who's who in the zoo, who can deliver what, when, and at what cost. And that's really now what you're starting to see feed through. Some of the early stuff has gone. There were a few producers trying to really fight for market share rather than anything else. That's filtered away as well. And you're now looking for the new production to get contract, which is why you're seeing the contract price up at $50. At the same time, that spot price, if you're a utility and you want to go out and contract, it's a lot easier to go into your CFO and say, I want to cut a contract at $50, $55, when the spot price is at $63. A completely different conversation that's going on. So for me, that's really has been the step change coming through. And then, coming back to your question earlier, is it geopolitics? It's both. The reality is geopolitics has radically changed how everything is moving around the material. You've got supply constraint. The other thing that's changed, energy costs more, and we saw this when the gas price went up a year ago. Gas price spiked as well. Uranium price went up with it. Why? Because the utilities can pay more because they're getting a better utility price at the gate, at the customer. So, all right, I can afford to pay more for my uranium because I'm actually selling them my customers power at a higher price in a competitive market. And that changes the fundamental as well.
The thing I've realized after sort of 3 years of covering uranium, and it's only been recent, and so is that not all developers will get into production, right? And I think the utilities recognize this. I think some of the industry people that I've been speaking to recognize this, and that's got to be a good thing for the guys who have good, strong fundamentals to their story and feel that they will. It's good news for you two explorers because you suddenly become more valuable as it's recognized that some of these developers won't get into production. So again, you've got to think about, how do I take advantage of that, Cory?
Yeah, how do I take advantage of that? It's about having the right access to land, people, and having the ability to explore. That's the market, the funding that we need to go out and do what we do. That's the key for us. We've spent a lot of time in the last 10, 15 years getting that land in position. We've added to it recently. We're focused in the Eastern Athabasca, where I articulated there's a problem coming. So we see a need by our partner Cameco at our West MacArthur project, but also nearby the Cigar Lake mine on one of our other projects we're exploring. So being in that right real estate at the right time with the right people that have done it before and can do it again is critical. And we've positioned ourselves very strategically in the last decade, but really in the last 6 to 12 months to execute now in a good market where we've got support for what we're trying to do, where we've got the ability to make a discovery that makes a difference. And I think now we've got the tools to do that in place and we're ready to go. So it's a fun time.
John, same story, I guess.
Yeah, and for us, I mean, look, when you look at companies, as you say, there are a lot of companies out there who will not get production. There are some that don't want to get to production. They want to get themselves flogged off to somebody else as well. So, at the end of the day, you got to look at the guy who's willing to hold the baby at the very end, because if you're not doing the studies right, you're not going to get it right. You may be the guy who has to build it. And our strategy has always been to assume we are going to be the developer, unless somebody offers us the egregious check that we just can't refuse. But, and that's part of where we've been as a company all along. I mean, we were a consolidator back in 2016. Why? Because we felt we needed to have a pipeline of projects in it for risk perspective as well, but also we knew at some point one of our projects will get built and we better have another one in the pipeline because we're now a producer. And once you become a producer, your only way you can have growth is by having another project to add to what you're doing. So, you're setting yourself up to that long term. We got a lot of exploration upside. So there's brownfields expansions possible as well. But, again, look at management, look at companies that are doing it right. Treat each PEA, we treat each document we do as though we've got to better it on the next one. You don't kind of just tart it up and make it look attractive just for the hell of it for the market. That's an engineering document. Might have to build that thing. So you want to see management who actually understand that and know what they're going to have to go and build, and not leaving things out just because it makes their numbers better.
If Daniel is the company that's holding the baby at the end of the situation, I think Cory and I, we're the ones that are in the front end making the baby. So we're the ones who are out there. How you want to look at that? Yeah, not together, but
that's making the cut.
Yeah. So here we are. So standard, we've got 5 great projects, and we've got an exploration team that's made discoveries before. And we're in the region where, as Cory said, we're to tier 1 projects. If discoveries get made, those are going to get moved along. And our investors need to know that, look, those are great opportunities to come see what these guys are doing. Look at the reports they're putting out of the drill programs they're doing. Are they getting closer and closer to that discovery? And we're happy to say that we are. Every drill program we do, the results are getting better and better. Our geos are getting the data they need to help move the project forward. And we're exciting to be going back into our Davidson River project for our fourth program starting in a few weeks. So something for our investors to get excited about as we just wrapped up our inaugural drill program at our Sundog program.
And Matthew, you'll know in the old commodity value curve, there are 2 points that actually go exponential. One of those is the explorers. The other one is the other end when the developers build, and we always have a chart that just shows the valuation difference between the developers and the producers. And you more than double at that point as well. Yes, you're taking on capital risk while you're doing it, but those are the 2 parts of that valuation curve that go exponential. And you've got both of them sitting at this desk.
Well, that's what I wanted to get you guys on for, because that we're talking about the Lassonde curve. For people who don't understand it, go look it up. It's very, very obvious. You've got two guys at the beginning of one of the hockey stick moments, and you've got Daniel sitting at the other, sort of post feasibility and development stage. So that's quite exciting. Cory, you've probably timed this right. Your company was sitting around for a long time waiting. I think everyone in the uranium space has been waiting since 2011 for this movement. But do you think that this cycle lasts longer than previous cycles, i.e. you've got more time to get it right?
I do believe that, Matthew. We've talked about this before, that this cycle feels different than the last cycle, which was relatively short-lived. And I really lean on the fact that over that 10-year, 12-year low period, reserves continued to come down from the current producers, and they were not replenished through new discoveries or projects that are put into production. There's projects ready to come into production, like GoviEx, absolutely. But there wasn't anything new replacing that in terms of discovery. And if you think about the Athabasca Basin, I tried to articulate it, 15 years from now, it could look radically different from a production perspective. And reality is, if CanAlaska made a discovery today, it would be 15 years to production. And that's probably a fast track in the Athabasca Basin. That's real. Daniel is sitting on GoviEx is sitting on a different end member where they can move it a little faster. So two very different jurisdictions, but they all come to play together in what is required to feed and fill that demand that is coming literally like a tidal wave in front of us. And, that's the fundamental difference this time. You've not had the discoveries to support the increasing requirements that are out there, and that's a big deal.
Well, it's increasing for sure. Like mentioned earlier, the UK government stepping up their ambitions. We saw $400 billion worth of infrastructure investment from the Chinese government for 45 new reactors, and lots of SMR talk at the moment. So the demand is there, and it's a very different narrative. We're seeing environmentalists also getting aboard this kind of green fuel, being nuclear and gas as well in the taxonomy here in Europe anyway. John, just for you, what would you say to new investors looking at the uranium space? What do they need to know? What should they be looking at to make better investments than perhaps just the pub talk, which seems to be proliferating around social media?
Well, great. Good question, man. I think we're starting to see brand new investors come into the space because they're hearing about nuclear energy. They're hearing about uranium as a hot sector to get into. And I truly believe uranium is going to be one of the hottest sector for the next few years. So when investors look at companies for the first time, they got to figure out, what are they looking for? Are they looking for a real safe investment of a company that's maybe already in production, somebody like a Cameco, which is going to be a nice steady return on their investment? Or are they looking for something with a bit more of a mix, a bit more of a high torque opportunity, a big discovery by a junior? And if that's what they're looking for as part of their mix, they need to be looking at different regions around the world. Maybe they want something in Africa, something in Australia, maybe they want something in Canada, want something in the US, and looking at the opportunities. Now, if you're going to pick different regions, if you're looking at, say you pick Canada as one of your regions, now you look at the Athabasca Basin, because that's the primary region in Canada where actually discoveries are made. High grade discoveries are being made there. There's other regions in Canada. We're seeing new companies pop up in Ontario, in Newfoundland, up in the far north as well. But Saskatchewan's Athabasca Basin is the premier spot globally for high grade discoveries. Now, if you're looking for a company to make a discovery, what do you look for next? You look for companies who've got management that have actually been in the capital markets. They know how the capital markets work. You want to have technical teams that have made discoveries. People who've seen the life cycle from the start of a discovery to work it all the way through. Our companies both have that. What else do you want to have? Companies who've got great relationships with the First Nations partners. If you don't have that, forget it. Don't even bother looking at these companies. Number three, you need to have government relationships and be able to get your permits on time. And then you have to have investors that believe in your story, who are supporting you, who are helping you fundraise and get those capital raises done. All those things come together. And I think, Cory and I in Saskatchewan have got those things going for our two companies. And there's a few others that I'd encourage investors to look at. And once again, you might want to diversify. You might not want to put all your eggs in one basket of one company. So have a look around, see where you can spread your money out and look for multiple opportunities.
Well, look to Africa as part of the portfolio, wouldn't you say, Daniel? Do you want to be the African spokesperson?
Of course, look, again, as we said, you get the talk at different points, and the developers are the other part of it. Who does fill that gap that's out there, because that gap is coming fast. I mean, and it's, if you looked at anyone, whether it's UXC, whether it's WNA, it's 2030. It's 2030 onwards. The gap opens up, and no matter what projects you put into it, you don't fill up the gap. So these gentlemen here have got a long way to go. It's the companies as well who can talk into that now. We're looking at 2025 for the first project, assume we can get all the financing, 2027, the second project, fitting into this pipeline as it comes through, so that we're in there going forward. So there's plenty of spaces to look. There are some really good teams out there. Absolutely. And I think, what is different this time is we actually have a growing nuclear industry. In the last cycle, it was not. It was actually getting pretty stable, and really was no real big growth out of it. We had a lot of supply coming on because of Kazakhstan. You had the restart of Cigar Lake coming back on as well. But what you were missing was that real demand growth. And the one thing that I'm excited, particularly in the UK, not just the fact that they're building reactors, is they've changed the financing model for it. And that radically changes the economics of nuclear as well. And that is the key of what will be successful in our region. Well,
the cost of energy is already cheap. But gentlemen, I want to just wrap it up there and say, for those, thank you for your time. You've got three good companies with three good management teams here, folks. If you haven't got uranium in your portfolio, you should. The market's moving. I think sentiment is moving, and everything seems to be heading the right direction. So, gentlemen, I thank you for your time. We'll see you soon, I'm sure, individually and on more of these panels. But it's a super session. Thank you.
Well, thank you, Matthew. Real pleasure.
Take care, everyone. Good to see you.